Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I think there'll be slightly broader smiles. Indications of a bit of a thaw between leaders of both the US and India as well. I'm Prashant with me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning, folks. Yeah, well, at least, they're going to start talking trade again, India and US, from the looks of it. Though you have the other issues, the geopolitical issues around Ukraine, and we don't know how that's going to play out, the secondary sanctions and all that talk. So a lot of moving parts, but at least there's some forward progress.
Well, that's right. You can't second guess what Trump's going to do next, but at least the commentary that's come through is at least we're getting on the table and hopefully we come up with something. I think that's the positive.
There's a clear there's a clear de-escalation in tone, tenor.
Yeah.
It was a rant against India, etc. It's not
brutal.
that. And this started almost about 6-7 days back. The first time we highlighted it, that it's non-confrontational in that sense. And I think now, of course, it's overtures, clear overtures that, well, we want to work with you, etc. So let's just take it from the top in terms of where things are at. So President Trump once again expresses confidence. So this was a soundbite earlier. This is a post now. So he's expressed confidence in India-US talks, and he's eyeing a successful outcome. Actually, let's put the tweet up, the post up actually on this is Truth Social, not Twitter, or X as it's now called. And this is what it says. I'm pleased to announce that India and the US are continuing negotiations to address the trade barriers between two countries. You can nitpick, right, and saying, well, it's about trade barriers. He's still looking for concessions from India on lowering those trade barriers. But, well, take the message. I look forward to speaking with my very good friend, Prime Minister Modi, in the coming weeks. I feel certain that there will be no difficulty to a successful completion for both our great countries. So that's President Trump. Now you have Prime Minister Modi, who's once again, it's actually the same kind of thing what we saw over the weekend, actually. Prime Minister Modi reciprocating warmly. India and US are close friends and natural partners. And if we can quickly put that tweet up as well. And this is just, I think, not even 20 minutes old, this post from Prime Minister Modi saying India and US are close friends and natural partners. And I think that's the most important line, which many have made, that they are natural partners. So this does not make any sense. I'm confident that our trade negotiations will pave the way for unlocking the limitless potential of the India-US partnership. Our teams are working to conclude these discussions at the earliest. I'm also looking forward to speaking with President Trump. We will work together to secure a brighter, more prosperous future for both our people. So that is, of course, going out from Prime Minister Modi here. And I think there's no other way to put it, but this is clear de-escalation in tone, tenor, and this is coming in right from the top. This is not, second-tier, third-tier officials or ministers sort of talking. This is President Trump, who essentially started this entire thing, now walking down a little bit, and of course Prime Minister Modi graciously meeting him as on the de-escalatory ladder in that sense. Can we say for sure that, well, this is going to be resolved soon? As we've said, no one can tell. I didn't think that actually these additional 25% tariffs will take note once they did take effect. The view broadly, at least I felt it'll get resolved one way or the other, sooner than later. Those are both the posts, one after the other, side by side, on your screen, just for context. So this is clear de-escalation. It's positive for markets, and I think that's something to take note of. There is one more story, and this is being carried by CNBC. It's being carried by other publications like the Financial Times, etc. as well. Trump asking the European Union to levy tariffs of up to 100% on imports from China and India, what EU imports from China and India, to put pressure for both these countries not to buy Russian oil and to kind of put pressure on Russia to stop the war in Ukraine. So many are pointing to this and saying, well, there is this and that. And while that is true, I would still say that the main message, of course, is what President Trump is saying, clearly, very, very unambiguously. And of course, the response from Prime Minister Modi as well is very clear. I would go with that. This, of course, at the margin, it's possible this is true and this is happening on a sidetrack as well. But I think the message is that India and US are natural partners. All right, let's just quickly run you through a couple of other things. The U.S. Supreme Court is going to hear the Trump tariff case in November. That was, of course, what came out a couple of hours back, and this is crucial for markets. But we've also said this, that even if the Supreme Court were to say that all these tariffs are illegal, the tariffs as a strategy are not going to go away. They're very central to this administration's roadmap, and they will find other ways. They will use other sections, maybe more cumbersome to apply, sections like 301, 308. We've spoken with experts in this area. They're more cumbersome, but it can be done. But I think this is interesting and important as a sort of point in time as well. Now, overnight, S&P was up a little bit. The dollar index saw a bit of a lift. The US 10-year yield about 4 basis points higher. You had the BLS annual revisions, which further cemented expectations of a rate cut. After hours, Oracle, the last I saw, 25% higher, really bumper forecast as far as their cloud business is concerned. So that's the setup. I think the big one, of course, is not the overnight cues, but what's come through from President Trump. Now, the Nifty yesterday closed above the 40-day exponential moving average. And I think, if anything, what we've seen in terms of the overture from both leaders gives a bit more momentum as far as this rally is concerned, which has been building legs. It's been slow burn, but it's been building. And I think a huge amount of shots in the system, especially in terms of FIIs and index futures. And I mean, they were the second largest overall short contracts ever. I mean, I think some of that covering will start in specific sectors, which we'll address a little bit from now. So Nifty needs to close above 25,000, which is the falling trend line for the upside to build. Support remains the same, 24,522, which is the recent low. The Nifty Bank closed flat yesterday and there was a marginal gain, but largely flattish. Support here is the swing low of 53,561, but I think you should look up now. And here the resistance is the 20-day moving average, which has moved from yesterday a little bit, 54,733, and the 40-day exponential moving average, which is 55,130. Well, the GIFT Nifty should give you a sense, reacting to, these overtures, 75 points higher on the GIFT Nifty as we begin this session. The F&O stats with Nigel is standing by. Nigel, over to you.
Well, that's right. Overnight you did see the geopolitical issues did creep up yet again, but this comments coming in from both Trump and Mr. Modi, they indicate that maybe, in fact, at least the US as well as India moving towards some kind of resolution, which is positive, and that's the main factor that the markets have been fixated on. So that's positive. What else is positive? Last few trading sessions, you look at it, institutions have been net buyers, and you like that. So that's a good data point that's come in there. What about in yesterday's trading session? Not too much movement, both on the long as well as on the short side. But the short positioning continues at around 91%. And we pointed this out, that the last few trading sessions, the FIs were adding shorts. Short positioning is up by close to around 10%, holding close to around 1.9 lakh contracts on the short side. But they're not getting follow through. Now, today we're likely to see another 100-point gap up. So that's what's going to make those FI shorts a little bit nervous. Positioning on the index should come up for you. FI is net short, clients net long. Now, those short positions will be getting a little bit nervous because follow-through hasn't been got on the downside. And now the comments that are coming in on the India-US front, well, that's indicating movement towards some kind of resolution. Move to the options data then. The 24,900 call, 25,000 call, both of them did see good amount of open interest build up, close to around 45 lakh shares. And, on both those two strikes, the kind of open interest build up told you that some of these call writers believe that that 25,000 mark is going to get protected. Now they'll be getting a little bit skittish because the markets are suddenly finding their way higher. On the downside, though, the 24,900 put, well, that did see a good amount of open interest build up with the premium at around 130 rupees. So looking at the options data, looking at the technical levels, a couple of levels comes up for you. For today, you'll want to get past this high, the September 4th high. That's the high that we saw last week itself. So that's going to be the important mark. Resistance comes in the vicinity of around 25,000 odd. If we can get past that, I'll tell you what, we're bracing for a big short covering bounce. Reference point just for the day on the downside, going by the options data and where the technical levels are, is at around the 20 DMA. The Nifty Bank, that needs to find its form because you can't have the largest, the largest participant on the Nifty itself, largest weightage, not participate. So this 20 DMA becomes important on the upside. However, at around this 53,000 mark, we have seen some kind of buying. So that's the important mark that we're looking at. Since India as well as US are moving towards a trade deal, the stocks that got hit when Trump was talking about putting tariffs from 25 to around 50% or thereabouts, those stocks today will see a bit of a relief rally because the commentary is in the positive direction. And there is hope that we'll see some kind of development on that front. So positive rub-off. That's why I'll keep an eye out on both these two stocks. They've got hit very, very badly in the last month or so. Wellspun Living, Gokuldas and other exporters as well. will be in focus. But, Surbhi, as last week we said, the indications were, maybe the feelers are that, in fact, we're getting to some kind of a truce between the two. It looks like that's playing out.
Well, it's definitely good news. I mean, there is good news coming in. And, several good points. You've got that FII cash market buy number, 2,000 crores of cash market buying, and we've not seen that in many sessions, plus the short covering that Nigel spoke of, and obviously this, sort of de-escalation of sorts. Just bear in mind that the only outlier situation is what's happening with Ukraine, because there have been reports about some, jets scrambling in Poland, NATO allies getting together because of some missiles that were fired towards Ukraine. But that's on the side. Otherwise, it's been good going. And Asian markets this morning, should tell you, in addition, are all a bright, shade of green. So there's no problem from Asia either. We've got inflation numbers out of China, and disinflation in China is only deepening. So that's just an additional data point to keep in mind. But let's get back to the big story. US President Donald Trump wrote on his Truth Social handle that India and the US are continuing negotiations to address the trade barriers between the two countries, marking the second such remark he has made over the last few days with regards to ties with India. He also added that he looks forward to speaking to his good friend, Prime Minister Narendra Modi, in the upcoming weeks, that there would be no difficulty in arriving at a successful conclusion for both nations. And Prime Minister Modi has also reciprocated very quickly and quite warmly, saying that India and US are close friends and natural partners. In fact, the Prime Minister also referencing that he will be speaking to President Trump in the coming days. Let's in fact get to our colleague Parikshit, because he's been picking up from sources that India and US, the key trade officials, they are likely to have had an exchange of trade delegations soon. Basically, there's going to be, the trade talks and the delegations start meeting each other again. Parikshit, hi, morning. Thanks for joining us early in the morning. But this is big. I mean, this is the first real, very solid sign of a thaw. Something's changed, and it seems to have changed in favor of the relationship.
Clearly, things are changing and changing very fast. We saw some very positive commentary from Donald Trump at the Oval Office, where he said that India and US will be able to resolve their differences. Narendra Modi is a great prime minister, and there are always moments in the relationship. The prime minister also reciprocated that gesture almost immediately. This only goes to show that officials on both sides have been working behind the scenes to put the relationship back on track. And every week we are seeing an improvement. Sources now tell us that the president's statement and the prime minister's statement now indicates that the trade talks are now back on track. They will take place, and officials from both sides will try and fast-track negotiations to arrive at an early conclusion and resolve all outstanding trade issues. Now, what does this really mean? Earlier, we had seen the 6th round of trade negotiations being postponed, and now that round could possibly take place this month itself. We're learning that discussions are on between the two sides to have an exchange of trade delegations, which means that either an Indian government delegation could visit the United States this month, or a USTR or US Trade Representative delegation could visit India for negotiations, and these would be in-person negotiations. We've not had in-person negotiations for the past few weeks after the 6th round was postponed. However, almost daily on a regular basis, there was contact between Commerce Ministry and USTR officials, MEA and State Department officials, and also officials between the Indian government and the White House. Those communications channels had never closed. That's what sources indicate to us. But for the moment, this is a very clear indicator that there is a very strong intent. And this is what President Trump and Prime Minister Modi's statement today indicates, a very strong intent to resolve the outstanding trade issues and barriers and arrive at an early trade deal, possibly by the end of this year. And we now look forward to a confirmed date on the formal in-person negotiations, but we've been told by highly placed sources that this could take place this month itself.
Sure, absolutely, Parikshit. And even the other, aspect of it, the talk of secondary sanctions on Russia, or Russia's trading partners, India and China, he's lobbed that ball in the EU's court, as we know. So in some sense, even that is sort of something which is not very sort of retaliatory in nature. Thank you so much for joining in with the perspective, and we'll watch out for developments on this front. Thanks for joining in. Neeraj Seth, founder and CIO at 3R Investment Managers, and Arvind Sanger, managing partner at Geosphere Capital Management, is joining us to talk about some of these fast-moving developments and where that leaves India in the Indian market. Gentlemen, thank you so much for joining in. Arvind, so it's sounding really good, because we've just heard so much rhetoric over the past 2 to 3 months that this de-escalation coming right from the top is good. I think the market's taking note. We've seen some sign of cash market buying, some short covering in specific parts of the market. How would you look at the positioning here in India, given the change at the political level?
Well, it certainly is quite encouraging that President Trump is saying good things. I'm still a little nervous that there's many a slip between the cup and the lip. And hopefully that's not going to happen again, because India has been close a few times and it hasn't happened. But I think enough tension has built up, and now it's time to de-escalate. And if President Trump is recognizing that, it's clear that Prime Minister Modi has been ready to take the step once President Trump climbs down from his, somewhat hawkish stance on India that he's had for the last couple of months. So I think that it's optimistic. It is obviously clear that FIIs have been avoiding the Indian market, and clearly you could see his inflows into the market. So I think there is room for a relief rally. But I come back to the question of what is going on with the Indian economy. Obviously, we had great GDP numbers in the June quarter, but we'll have to wait and watch some of the more important real-time data, whether it's in auto sales or it's in electricity demand or other measures, showing that the Indian economy is starting to reaccelerate. And between the GST cuts and a US deal, maybe that acts as a shot in the arm for the economy to find its mojo again.
Right. Arvind and Neeraj, thanks very much. Good morning. Neeraj, how would you look at this from a foreign investor point of view? There was Mark Mobius who was broadly, I don't think he was putting this as the point in time when FI flows will turn, but as a broad indication, which Arvind also said, FIs have been avoiding India, they've been selling. And once this US-India thing gets okay and back on track, maybe it's a bit of an indication more than anything else, and maybe that will play out as well. What's your sense, Neeraj?
Overall positive. I do think we are at a turning point here. As Arvind said, you still have to be mindful about how it develops and how it gets resolved. But to your point, there has been some level of selling from the FIIs over the last few months. And I do think you will see actually a pause in selling, some reversal from a flows perspective. I would highlight one additional point. You've seen some level of outsourcing of putting pressure on India and China, more from the perspective of trying to resolve the Russia-Ukraine. President Trump has put it on EU. And I think this is not something markets are fully focused on. Given the slow but clear pressure building up, I think there's a possibility that in the coming months, you get some form or shape of resolution of the Russia-Ukraine situation, which again, when you think from India's perspective, whether it's geopolitical aspects or the security and the price of oil, is going to be a positive. And I think there's a downside getting built in at this point for the potential for the crude oil going into the year and then next year. But the markets are not pricing in it at this point, given obviously you still have a lot of geopolitical issues. So I think the combination of flows and the backdrop that potentially will improve in the coming months, I think it makes me positive right now where we are.
Arvind, you're intimately familiar with what's happening in IT services. And that's one area where there are large shots in the system. And of course, additionally, there's been this fear-mongering about maybe services will be touched and taxed, although it seems completely unfounded. That should also, at least from a tactical perspective, get a bit of a lift, that space?
Yeah, I think there was a bit of a fear and a risk that does the US go after H-1B visas and try to disadvantage Indian IT outsourcing. And clearly, this should remove that overhang. And so absolutely in the short term, if that overhang has been part of the concern in the IT space, that overhang should go away. The longer term challenges remain, but I think the stocks maybe have had this short term concern added to the long term overhang. And the short term concern should definitely recede.
All right. Hi, good morning, gentlemen. Good to see you all in. Arvind, do you think if a deal actually comes about, India could actually outperform after underperforming drastically for the last year or so? I look at MSCI Emerging Market Index. That's up in double digits, more than 10%. India is down. MSCI India is down more than 10%. Could we get back to a market perform or even outperform in the next 12 to 18 months?
Well, I would come back to 2 points. One is that removing the trade tensions and the trade barriers that have crept up will certainly be helpful for part of the market, which would be the export-dependent economies. But I think the bigger question, which is why India has outperformed, not just in the last month or two when these tariffs have come, but longer term, has nothing to do with tariffs, but has to do with India's own somewhat disappointing growth numbers. And hopefully between the GST reforms announced by Prime Minister Modi and these tariff clouds clearing up, it gives a shot in the arm to the economy. And if that happens, yes, there's clearly a catch-up trade that can happen in the market. But we need to see the follow-through in the economy. And I think the 1-2 punch of these two things should hopefully help deliver that.
All right, let's hope, in fact, domestic economy as well gets its act together. In fact, there have been measures on ground, both fiscal as well as on the monetary side. Neeraj, the last time we chatted, you were saying focus on these domestic themes. Domestic consumption is something that you liked, as well as financials. That's got the much-needed boost, right? In the next 10 days or so, we'll reset to the new GST numbers. How are you positioned right now? And what are the themes you like when you look at consumption? If you could break it down a little bit.
So I would actually split it in 3 parts. The equity side, in terms of how you're thinking about it, I still stick to the sectors in terms of consumer financials. I'm still somewhat skeptical on if you see a rally in the IT services, because there are more structural themes in terms of the headwinds building up there. So I still think overall, the question, can India, from an equity market perspective, see a relief rally and also have potentially a catch-up? I think there is certainly a case for that, but the growth story will prevail post the initial relief rally. The second part, we didn't touch on this earlier, INR has actually underperformed the rest of the regional and the global peers when you think about the currency. And the interesting crosses you can look at, so Indian rupee is weaker by 3%, almost 3% this year, when the dollar has depreciated 10 against the majors. And I think there can be a little bit of a currency reversal here. Like INR has also outperformed Indo-Asian rupiah, which is going through obviously a different set of political issues. So I think there's a currency angle here, specifically from a foreign portfolio manager's perspective. And lastly, the RBI stance. I still think there will be room potentially down the road for RBI to cut, even though they had moved to neutral. But that will come with a pause.
Yeah, no, absolutely. Neeraj, good points there. Arvind, always great chatting with you. Thank you very much, gentlemen, for joining us here on the program. Let me just quickly run our viewers through what's lined up next here over the next 2 hours or so. So we've got 8:35, the management of JK Lakshmi Cement joining us. We talk about the impact of GST cut. 9 o'clock, we'll be joined by Vishal Manchanda. Systematics Group is the US FTA puts Sun Farmers Halol plant under import alert. 9:20, Vetri Subramaniam of UTI AMC is a market master of the day. 9:35, Abhiraj Singh Bhal of Urban Company on their 1,900 crore IPOs. It opens today. Anil Gupta of KEI Industries speaking with us at 9:45 to talk about implications of the GST cut on their sector and the company. And it's the economy with Lata. She speaks with Chandresh Jain of BNP Paribas on the falling rupee and rising yields. Stay tuned.
Time to take a quick break. We've got a lot of stock-specific action to track for you in our special Top 10 segment. For the time being, I'll run you through the list. Aicha, Vikram Solar, HEG, Sterling Wilson Renewable. You have Avanti Foods as well as Apex Frozen Foods. They'll all be reacting to positive news flow, while Sun Pharma, Kotak Mahindra Bank and Blue Jet will be reacting to negative news flow, while we're expecting neutral reaction on Vodafone Idea. Take that break, come back, we get into further detail on all of these names.
Welcome back. So it's actually a good morning as far as global cues are concerned. The rally continuing on Wall Street and Asian markets looking good as well, despite the fact that the inflation data out of China is not very inspiring, deeper disinflation in China. But the markets are absolutely fine. And we have that backdrop of, better comments from Mr. Donald Trump on the India-US relationship. So that all of that put together is telling you that it's going to be a nice big gap up, perhaps against 75 odd points. So let's see if the bulls can trot on. Well, we have plenty of interesting stocks in focus as well. So let's get to our list of top 10 stocks to watch. Guys, good morning to all of you. Starting first with Ekta today. Ekta, some troublesome news for Sun Pharma. This Halol issue simply not resolving, it seems.
Well, you know what? Actually, for Halol, it is a status quo because it's been under import alert since 2022. It was re-inspected in June of this year, from 2nd to 13 June 2025. And at that point in time, the street had pretty much made up its mind that the observations were not difficult enough that it could possibly be a status quo for Sun Pharma when it comes to the Halol facility. And rightly so, the site has been now classified as official action indicated, and the FTA has found that the facility is not fully compliant with current good manufacturing practices, and hence it remains under import alert since December of 2022. Remember that with an import alert, there are only limited exceptions allowed in terms of production of certain drugs from that particular facility. Now, compliance with the US FTA and CGMP standards are required before shipments can resume. So it's pretty much a status quo for the Halol facility. You could probably see the stock in the red, but the street has made up its mind that maybe Halol is not going to be the key facility that Sun Pharma is going to be supplying the US from, and hence the street to a certain extent has also moved on from it.
Okay, all right, Ekta, thank you very much for that. We're going to focus on Vodafone Idea next. Ashmit has got details here. Ashmit, morning.
Well, the AGR issue is once again before the Supreme Court. We given to understand that Vodafone Idea has filed a fresh petition in the Supreme Court. They're questioning the additional AGR burden that was slapped on them. Again, that's a fine distinction that needs to be drawn, a fine line here. There were additional AGR dues that were slapped on telecom companies like Vodafone Idea, above and beyond the AGR burden that we're already familiar with. This additional burden was about 5,600 crore rupees on Vodafone Idea. That's being questioned, that's being challenged. Vodafone Idea is arguing in its petition that there has been instances of double counting, of arithmetic errors, that there's a need for quashing this entire additional AGR demand altogether. But that's where things get interesting. The language that has been used in this petition provides not only for questioning and challenging this additional burden, Vodafone Idea is also seeking a reassessment of all the AGR dues up to the period of 2016-17, and thereby raising the question if they're seeking again that age-old demand of Vodafone Idea for recomputation of the entire AGR burden. Bear in mind, speaking of AGR, 2019 is when the Supreme Court had upheld the AGR demand. Since then, the Supreme Court has rejected a modification petition, a review petition, a curative petition, and more recently a fresh petition of Vodafone Idea asking for relief. So the Supreme Court has given clarity in the past. All eyes now on Vodafone Idea and its counsels for seeking any further relief from the Apex Court.
We'll keep an eye on that. Well, let's focus on Kotak Mahindra Bank. Nimesh had briefly mentioned, I think, in D-Street Chatter, and yesterday even Yatin had joined in to tell us about that large trade. Nimesh, large trade is what we're looking forward to. Tell us more.
Absolutely. So I expect a big block in Kotak Mahindra Bank. Sumitomo Corporation is going to sell entire 1.65% stake via block deal. The floor price indicates a 4% discount, but my sense is the deal will get executed in the block window. Some large FIs and some domestic mutual funds are anchor investors. So if it executes in the block window, you will see a bit of a short covering rally. So as I said, if the deal gets executed in the block window, expect a green in Kotak Mahindra Bank. It's a clean out trade from Sumitomo Corporation.
Okay, all right. Thanks a lot for that, Nimesh. Let's go across to Sudarshan. He's tracking Eicher Motors. Hey, Sud, morning.
Morning, Nigel. So, if you are a fan of Royal Enfield, or say in many parts of the country, which is known by Bullet, now company has announced that it will be passing on the entire GST benefits that would be effective September 22, and the price cut would be up to rupees 22,000. So the models Bullet Classic, Hunter and Meteor, which form nearly 87% of its domestic volumes, will go for price cut. And the range is from rupees 17,000 to up to 22,000. And company is saying that GST decision will, for motorcycles under 350cc, it will make it more accessible for the consumer. So now the stock has been one of the major performers, and being one of the major beneficiaries of GST decision, we might see continued up move.
Okay, all right, got it. Sudarshan, thanks very much. So Eicher Motors is going to be on our radar. Vivek is joining in. Recently listed company Vikram Solar came out with numbers. There's also, I think, Blue Jet Healthcare on Vivek's radar. Tell us more.
Well, that's right. Good morning. Vikram Solar recently listed in line with what solar module manufacturers have done in Q1. Very strong set of numbers. Revenues high by almost 80% on a year-on-year base. Off a slightly lower base. EBITDA high by 117%, so more than doubling, 242 crore. EBITDA margins very strong, over 21%. profitability higher by almost 6 times on a year-on-year basis. The order book quite strong compared to when the IPO was announced, so at 10.96 gigawatt. Along with that, the company has also received 3 orders between Q1 and Q2. Now, coming to Bluejet Healthcare, in order to meet the SEBI's minimum public shareholding norms, the promoter has launched an OFS. They are looking to dilute stake. So the OFS they've launched, the primary or the base size of this particular OFS is close to 400 crore. The upsize option is for another 400 crore. The selling shareholder is the promoter Akshay Arora. Floor price is at 675 rupees a share, implying a discount of a little over 7.5%. Equity dilution at base size is 3.4%. If the upsize option is exercised, it's another 3.4%. So expect a mild red as far as Bluejet Healthcare is concerned today.
Okay, all right, Vivek, thank you very much for that. Sterling and Wilson and HEG are the next two. We want to focus on. Vinny's here with details. Vinny, morning.
Hi, good morning. So we're keeping an eye out on HEG on the back of a couple of news flows. One, the company's associate arm, that is Bhilwara Energy, has acquired 49% stake in Statkraft's Malana Power Company. So post this acquisition, Bhilwara Energy will actually become the sole owner of that Malana Power Company. Other than that, Bhilwara Energy has approved allotment of 1.7 crore equity shares to Singularity, and this is going to be at a price of around 142 rupees per share. So total investment by Singularity in the company would be around 250 crores. And post this, the investor shareholding will increase to 9.6 from 9.6% to 17.51% in Bhilwara Energy. Also, Singularity, just to alert that Singularity AMC was founded in 2015 by Yash Kela as well as Madhu Kela. So green is expected here. Sterling and Wilson also we are expecting green as they've secured an order of around 415 crores, and this is for a solar power project. So keep an eye on this one.
Okay, all right. Thanks a lot for that, Vinny. Well, let's do a quick recap of all the top stocks that we're tracking for you. The ones with positive news flow: Eicher, Vikram Solar, HEG, Sterling and Wilson Renewable, Avanti Feeds, and Apex Frozen Fruit. Stocks with negative news flow: Sun Pharma, Kotak Mahindra Bank, and Bluejet. The one that we expect a neutral reaction is Vodafone Idea. That's about all the stocks we're looking at. But let's go to Manisha, as always, who's here to tell us about the commodity space. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, 3 things that I want to talk about. One is gold, where we have seen an overnight all-time high yet again coming for the prices. And with that, we are at around $3,675 an ounce for the gold prices. We are up by nearly 40% for this year alone when it comes to gold prices. The second thing is about crude, where we've seen Israel and Hamas escalation yet again in Doha, and that has taken the crude oil prices up by 2%. It also has to do with the U.S. president's statements urging European Union to put tariffs or secondary tariffs rather on the Russian oil buyers, almost suggesting 100% on China and India. That is what has led to some premium coming for prices. And the third commodity on my radar is aluminum, because that seems to be outperforming in the near term all across the base metal prices, whether it is about China output or the concerns that we are seeing in mines in Africa, or the point that you're looking at tariff concerns leading to Canadian aluminum now trying to find newer markets. All of that has been quite supportive. So almost at $2,600 a ton for aluminum, with various agency reports suggesting that 3,000 perhaps is the target that you could see in the next 6 to 12 months for aluminum.
Okay, all right, got it. Thanks very much for that, Manisha. We'll quickly move on to Sudarshan. He's been looking at all the brokerage notes of the morning. So let's see if he's found anything really interesting. So tell us.
So UBS has initiated coverage on pipe companies, but it's an opposite call. It has a buy call on Astral and sell call on Supreme Industries. For Astral, target price is 1,800, and for Supreme Industries, target price is 3,500. So it's expecting volume recovery in H2 of FY26, and it's going to be led by government spending, real estate completion, and rising agricultural income. And overall, for this sector, it's expecting high single-digit volume sales growth in FY27. On the pricing front, it's saying that PVC prices are near bottom and it may rebound, and market is underestimating PVC price upside and margin gains. It has a buy on Astral due to margin upside with backward integration, and sell on Supreme Industries due to high capex, ROCE concerns, and challenges that company has been facing in other businesses. Nomura has come out with a note on Cummins. It has a buy call and target price is 4,500. It says cost efficiencies are being ingrained in growth ethos, and it has raised FY27-28 EBITDA estimates by 2%, and now it's estimating 18% profit CAGR over FY25-28 with ROE of 33%. Expects BESS to further bolster values proposition of companies' growth, and also expecting demand to improve further going forward.
Okay, all right. So thank you very much for that. Well, Indian seafood exporters, and there are a bunch of shrimp exporters who are listed on the market, may get a bit of a boost with regards to exports to EU. Ria is here with a quick update. Ria, take it away.
Well, yes, India's seafood exporters are expected to get a major boost since the EU has approved 102 new Indian fishery establishments for exports to the European Union. Now, this move is expected to add around 16% additional Indian export establishments in terms of trade volume. And the Commerce Ministry also expects an immediate rise of over 20% in trade volume as a result of this move. Now, remember that India's marine exports to the European Union are valued at $1.1 billion as of FY24, and marine products have also been recently impacted by the 50% tariff rate that the US has imposed on India. The US is the largest export market for marine products from India, followed by the European Union. Now, in terms of exposure to the European Union for some of these listed players, the first one is Avanti Feeds. 17.4% of the shrimp feed revenue in FY25 for the company came from Europe, and the company is already working on expanding their presence in non-US markets, including the European Union. For Apex Frozen Foods, around 39% of the revenue contribution for FY25 came from the European Union, up from 26% in the last financial year. And they've also said that they've seen robust demand from the EU in FY25, and they continue to strengthen their presence in this market further. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, as well as IFB Agro. So these companies may see some benefit arising from this new move.
Absolutely. So keep an eye out on this one, and Ria and others will be, of course, we'll be trying to reach out to these companies and put them on the air and ask them, what this would really mean. But the numbers as being indicated, very, very large. We'll take a break. We're back. We connect with the management of JK Lakshmi Cement as GST and cement stands reduced to 18%. What's the impact on volumes? Coming up.
Welcome back. You're tuned in to Bazaar Morning Call. Well, the first corporate on our radar today is JK Lakshmi Cement. We're joined by Arun Shukla, the President and Director at the company. Good morning, Mr. Shukla. Thanks a lot for joining in. Well, coming to you in just a bit. For the time being, just telling our viewers, 3 big points is what we're focusing on. Point number 1, expectations from the GST changes. Point number 2, the demand scenario in a seasonally weak quarter, and how does he see things move ahead? And point number 3, expansion plans. I believe some JK Lakshmi officials have been visiting various plants. We'll try to confirm that as well. First point, though, the GST cut. Mr. Shukla, this was a demand that the entire cement industry was asking for, and that's finally going to be real by the 22nd of September. Now, tell us, what is your estimates? The last time around you joined in, you were telling us that you're expecting industry to grow by around 6 to around 7%, and JK Lakshmi Cement will do even better. Now, you've got this booster shot. Do you think that you want to tinker with that a little bit? Are you a little bit more confident on industry growth as well as your own company's growth?
Yeah, good morning, Nigel. Thank you so much. And GST has been one of our GST rate cut, one of our demand for so long. And thanks to Government of India for acceding to our demand. And yes, definitely it is a positive move by the government and good for the cement industry. As far as demand goes, as I said last time also, cement is not that price elastic, yeah, to a great extent, right? So yes, definitely mid to long term, I definitely see that there is going to be some, positive movement towards, affordable housing, infrastructure, and even overall demand situation for sure. And cement industry is going to be benefited out of it. So my earlier demand of earlier growth projection was for about 6 to 7%. I think since for quarter 1 and even quarter 2 also, this month is not so good demand-wise. I still believe that industry is going to grow at a rate of about 7% around. So I still maintain that because, yeah.
And you will outgrow it, right?
And I outgrow it, yeah.
All right, so we should be working with the number of high single digits to double digits for JK Lakshmi Cement.
Yeah.
Got it. The other point I want to ask you is, since there is this run-up toward the GST rationalization, in the near term, demand would have been very subdued or must be absolutely hit. Is that correct?
Yeah, demand is really subdued, yeah. Because of rains also.
Rains as well.
Seasonally weak quarter. Intense rain across, yeah.
Got it. What about premium products, as a percentage of your mix? I think you're in the early 20%. Now, one school of thought is, as you said, demand is inelastic for cement. But those that were using, a particular type of cement, maybe they'll want to upgrade themselves. So instead of saving out, and putting that excess, the surplus money in their own pockets, they would say, let me consume a better quality cement. Do you see the premium sales go up?
I think you are right, Nigel. I think it's going to go up a little bit. Our plan is to go to 30% at least in the coming maybe a year time. Right now, we are hovering around, around 25% of our trade sales. So definitely, I think affordability of premium cement will go up, and hence this will increase our volume.
Okay, now the fear. States will get lower GST, SGST, because from around 14%, that will come down to 9%. That could potentially put a risk on some of the incentives that the state had promised you all. Could you tell us what is the rough incentive that JK Lakshmi Cement gets? And do you see this as a bit of a risk? I believe that capital subsidy that was promised by state governments, that will go through. But with regard to SGST, that could come down. Your take.
In our case, Nigel, we are not on SGST incentive anywhere, right?
Okay.
In Rajasthan at Udaipur, which we have expanded recently around last year, right? There we have opted for capital incentive, right? So we are not going to be impacted out of that.
So you don't see that capital incentive getting impacted on any way. And good to hear that, SGST for at least your company, that's not a risk.
Absolutely. We are not going to be impacted out of this, yeah.
Got it. Now, what about coal? Domestic coal could potentially become cheaper because, GST has gone up to 18%, but the cess has been removed of 400 rupees per ton. How much of your mix is domestic coal?
Domestic coal is very little, Nigel, in our case, because we use domestic coal only in our eastern operations. Rest of the places we import from outside, right? So it's not going to be of too much beneficial for us because our, share of domestic coal is not that great.
Okay, got it. So we have clarified on a lot of issues with regard to the GST rationalization. But Mr. Shukla, I've got my ear to the ground. And, there is this talk of inorganic growth. I haven't really heard of JK Lakshmi Cement be very, very aggressive on the inorganic front. Maybe at one point of time, Sanghi Industries, there was that market was speculating that maybe JK Lakshmi and the JK group itself, maybe JK Cement as well, was looking at. But in the last few days, there is this talk that, y'all are potentially looking at Andhra Cement or a Deccan Cement. The last time around, we briefly chatted about Deccan Cement. Andhra Cement, is there some interest? Have you looked at that asset?
As I said last time, I repeat once again, our focus is on organic growth. And we are just focused on delivering 30 million ton by 2030. All our plans are in place and hopefully we'll exceed 30 million ton by 2030. So as of now, on our table, we are just focused on organic growth.
But what about Andhra Cement, sir? Have you had a look at that asset? It has limestone reserves. Sagar Cement is the owner there. Not looked at it at all. No interest at all.
As I said before, we keep on evaluating based on the strategic fit which we have and also the value of the asset which we can really look at. So we keep on evaluating, but as of today, there is nothing on the table which we are evaluating.
Appreciate you joining in, sir. Thanks a lot. We're taking your word for it. I believe there is some interest that's coming about for Andhra Cement. At least there are visits. We'll have to see whether or not there's a deal. But thanks a lot for joining in.
Thank you so much.
All right.
Well, let's welcome in Deven Choksi, who's with us at DR Choksi FinServ. Deven, good to have you with us here. Thanks very much for joining us. Just first thoughts on this, the India-US overture, and where does this, there will be some short covering. Where will this show up in the maximum way, in your opinion, if you want to talk about stocks or sectors, Deven?
Good morning, Prashant. Well, I think the market has shown a distinct amount of resilience to the negative news which have emerged in past few weeks. particularly after the tariff-related dictate which came from USA side. Today, the situation is slightly turning favorable. Both the Commerce Minister as well as President of America, both of them are giving statements saying that the situations of working favorably on the arriving at the tariff conclusions, etc. Should that be the case, in my viewpoint, I think the market would cheer up. I think this particular month or a quarter, whatever we call it as, I think the second quarter of the financial year, I think the market should be making a reasonable amount of, stable bottom, as I would call it as. Wherever that level it is, I think the market would be forming that level. And that is the level at which I think I'm seeing the buying interest emerging. One of the most important point out here, the market is attracting a lot of new papers. And at this point of time, I think there is an appetite to buy some of the new papers as far as I think the new companies are concerned in the market. So in my viewpoint, given the kind of positive fund flow, given the kind of positive news flow expected rather, I think the things should be working out better as far as the market is concerned. We remain cautiously optimistic about various companies within the respective sectors where the growth is above normal. And that's where probably I think our focus remains as far as I think this financial year is concerned.
Okay, all right. Hi, Deven. Good morning. Good to see you, Ben. We heard the management of JK Lakshmi Cement. What's your view out there? I still believe a couple of small assets are going to get, consolidated in the next 3 to around 6 months in this fiscal. How do you approach this space?
Yeah, Nigel, good morning. Well, I think the 5-year scenario for the cement, given around 7-8% kind of a growth in the sector, I believe that cement demand could touch somewhere around 670-75 million metric tons across, I think, the country, given the kind of projects that we are executing. And those companies which have created larger size capacities, both due to the organic level of activities as well as acquiring some of the companies like Adani Group has been doing it. In my viewpoint, I think the larger capacity companies are the ones which are likely to be beneficiary of this particular size that is getting created at the current level. JK Lakshmi Cement also, I think, has been very vocal about 30 million capacity that they want to achieve from 18 million in next 5 years' time. So certainly, I think they are also moving in the direction creating the size. I believe the larger the size and larger the footprint that one is creating in the local markets would be the way to look at these companies. Both the construction sector, infrastructure side, as well as housing side, both of them are attracting reasonably good size of demand for the cement companies in general, as I see it. So distinctly positive, but selectively for the larger companies where the capacity advantage comes to their balance sheets.
Got it. All right. By the way, the large trade has taken place. Now we'll have to see whether or not there's a bit of a short covering bounce that takes place, because there were shorts in the system on Kotak Mahindra Bank, and this deal has taken place in the pre-open window. So those shorts will be getting a little bit nervous in today's trade. They've been talking about the trade deal. I wanted to ask about the textile companies, namely Welspun India, Gokuldas. Both of them got slammed. Now it appears, both the leaders are Prime Minister Mr. Narendra Modi and Trump. They're going to be getting onto the table and hopefully coming up with a deal. Going by the way these stocks have corrected, do you think it's time to gradually start getting in? Because sooner or later, there will be a more rational deal on the table. Your take?
Absolutely, Nigel. I think whatever negative had to be there, I think it has already come in. Maybe I think some working-wise this September-ended quarter might have some negative working impact, I think, as far as these textile companies are concerned. But that would be the last one as I see it, I think, because as we rightly observing, if both the leaders are concluding the deal, probably I think the normalcy would get restored. And in the third quarter onwards, I think you should be seeing better times for companies. Market would definitely pick up the tailwind if this announcement comes in. In my viewpoint, I think the downside is probably limited in this sector. Maybe select companies, I think, could be the beneficiary in this particular sector.
Devin, hi. Morning. On a side note, we're talking about all the secondary market. But the primary market is always very interesting, right? And today, again, there's a new issue opening. It just tells you about how India is consuming differently. Now, I'm talking about, of course, Urban Company. We'll talk to the management soon enough. One more platform company will be part of the listed universe. Did you take a look at it? I mean, only I think less than 500 crores is going in the company. It's largely an OFS. But did the business look interesting? The valuations, does it make sense?
Yes, good morning. Well, I believe that from the business model perspective, yes, I think it is a business model which is a requirement for Indian middle class in particular, who require the services of whatever the 9 services that they have built in their portfolio. They require those services. And in my viewpoint, I think they have been reasonable in arriving at, I think, the pricing for the services. Given the kind of balance sheet and P&L that one has seen right now, I believe that I think they have started showing the signs of sustaining the profitability, though it is only 1 year since which I think they have come into profit. And that to the international operations, they have still not come into profit. They are actually bleeding. But considering the fact that I think there is a focus to build the profitability as management is committing, I believe that I think that things could look relatively better from here. Question definitely will be on valuation. How do you sustain valuation? Unless you see a sharper jump in the profit, which probably I think could come either way of reducing the loss from international operations, or maybe I think some organic growth which they are promising to grow in current year and thereafter. So we'll have to wait and see. We have a subscribe rating on the stock, of course, but at the same time, we believe that I think if the market scales up too high, then probably I think valuation will become very expensive for the stock.
All right, Devin, we'll leave it there. Thank you very much for joining us. Subscribe on Urban Company. The management, by the way, comes up a little later here on the program, and we'll quiz them. We'll take a break. We're back with some technical trading ideas. Sudarshan and Mitesh joining us on the other side. Okay, welcome back. Let's just look at what the market is doing on the GIFT Nifty. Maybe was strongly higher in the morning when we looked at it. We've been talking about short covering. Where will short covering show up? It will show up where there is maximum short positions. And that's essentially what we want to cover with Sud, who's standing by to run us through the data. Sud, what's positioning looking like and where?
So first, talking about FIs remained heavily on the short side, and yesterday, but good party yesterday, after like several sessions, we have seen that FIs turn net buyers both in the cash market and in the derivative market. So as far as Nifty's levels are concerned, 24,820 around, support would be there, and resistance will come only after 25,000 Nifty crosses. Now talking about the stocks that might see a short covering. So RT stocks yesterday saw a short covering, and it might continue even today. So 2 stocks that I have selected, and those 2 stocks are just above 50-day moving average, and those are Emphasis and KPIT Technologies. From the auto pack, keeping on Bharat Forge, day before yesterday, we saw a huge buying interest coming in Bharat Forge, but yesterday again, stock was down more than 2%. Now, with the fresh news coming, fresh comment coming from US President as well as Indian Prime Minister, we might see buying in Bharat Forge. And from chemical names, keeping on both the companies, PI Industries as well as SRF, but most importantly, SRF, because it's one of the major chemical exporters to the US.
Okay, all right. So, keep an eye out on these names as we open up for short covering. We take a break. We are back with the pre-opening rates, with technical ideas, and of course, we focus on the pharmaceutical space with the analyst as well. Stay tuned.
Well, we've got good cues coming in from multiple fronts this morning. And in any case, yesterday, the bulls managed to prevail. So can they build on the momentum? That's the question. So therefore, how should you approach trade? Sudarshan Sukhani and Mitesh Thakkar are joining in. Gentlemen, good morning. Great to have you on. So the bulls look like they want to stir back to life. Let's talk about the index first, Mitesh. So what, long trades, then levels to keep in mind? When do you go long? If you get the 70-point gap up, then how do you navigate it?
Good morning, sir. So, we have avoided trading the index, believing that it will be ranged. And while, I've been mentioning that trading on the long side is more profitable because we might head towards the upper end of the range. On the index, we still don't have a clear sign of a possible breakout. So, the gap up opening should be good for people who are carrying long stock positions as well as, who want to trade long. But on the index, if I was to talk of levels, The first level on the upside for the Nifty will come in around 25,000 and then 25,150, 200 zone. So I think you might see the index head towards those levels, partly led by IT and other stocks. But people who are trading on the index with a long position, I think around 25,000, try to take some profits, trail your stop losses, and around 25, 150, 200, try to book full profits.
Okay, all right, got it. We've got the first pre-opening rates. It's looking even better than the implied open. Implied open was suggesting about 70, 75 points higher. First glance, Nifty wants to hit a century. So let's see how this plays out. So Darshan, morning to you as well. I remember it was a couple of days back, maybe it was late last week, when you said that one should be shorting the rallies. But has that texture changed now? What's your index advice, Nifty, Bank Nifty?
That was 10 days ago. And since then,
I thought last week.
We should be buying every day. So the context has completely changed. Throughout this week and last week, late last week, the idea was once we crossed 24,600, we should be buying every dip with a stop at 24,400. Now that continues. Even now, the view is that you should be looking to go long on a minor intraday dip or a sideways range. The only change is that move your stop from 24,400 to 24,600. I don't have a target because markets will do what they want. And they've been inching up rather than running up. That's fine. The trend is up and we should be long.
Got that, gentlemen. Morning. Mitesh, what are your trades?
On the stock side, Prashant, I have all buy calls today. The first one is a buy on SBI cards. It's done a good base building at lower levels, now reversing after a correction. Buy here with a stop, of 805. Look for targets of around 855, 860 on the upside. Colgate, which had a very good run post that GST announcement, has given a pullback in the last few days. Now gives you a good entry point. So keep a stop below 2375. Look for targets of around 2450. Buy on IDFC First Bank, which has been a buy earlier as well. Now can be bought afresh with a stop at 72.30 for a target of 76.5. And the final buy call is Adani Ports. Recommend buying here with a stop at 1360 for targets of 1420.
Okay, got it. Sudarshan, what about you? What are your picks?
Well, again, it's an all buy list. T-Target is a buy with stop under 868. LIC is a buy with a stop under 856. IRCTC is a buying opportunity with a stop under 699. And AB Capital is a buy with a stop under 283. The idea is to focus on mid caps because we are going long in the Nifty anyway.
Okay, all right, gentlemen, thanks very much, both of you, for running us through those trades. In about 6-7 minutes, we'll come back to you for some more ideas. I think the pre-open is settling down now, and maybe we can look at it. 100 points, 24,966. Pharma in focus. There is news with regards to Sun's Halol facility, but there is a bigger news flow with regards to India, US. Vishal Manchanda, pharma analyst at Systematics Group, is with us. Vishal, good to have you with us here. I'm going to start with the bigger stuff. At the margin, there's always been this fear overhang of sectoral tariffs. But the point is, we got more than, tariffs imposition in India was higher than anybody expected, and now we seem to be walking back. Does that take away some of these sectoral tariff fears as well?
So pharma so far remains exempt, but the Section 232 investigations are ongoing, and we might see some announcements on the tariff front, maybe a month or 2 months later from now. So as we have discussed this earlier, I think tariffs from an India perspective, it is difficult for Indian companies to absorb the tariffs, and so they'll need to pass this. And whether or not so the question is whether there will be other companies who can supply generics cheaper than what India supplies to the US. So my sense is we don't have any other cheaper options than India. Even if tariffs being higher in India versus other countries, I would still say India has a significant edge on manufacturing generics at a lower cost. So my sense is I'm not worried about the tariffs, but they'll have some interim transient impact on the industry. But Indian companies should be able to sail through those.
Sure, and absolutely. When if things indeed start to thaw out, maybe that unease also vanishes. By the way, I should just point out, since we're talking tariffs, and we're obviously discussing pharma, look at what's happening to the other sectors. In the pre-open, stocks like Gokuldas, Indocount, all of them are surging 4, 5, 6%. And then the shrimp exporters, keep an eye out on them as well because of the developments with the EU, more exports to the EU. So those are your, basically some of these export pockets are doing very well in the pre-open. Vishal, good to have you on. So, that's on the general tariff front. Specifically on Sun Pharma, there's fresh development. I think now there's a official action indicated status on their Halol plant. What does that mean? Because anyway, this plant was under an import alert. So is it at all an additional negative? I'm not sure if anything was going out to the US in any case. And overall, what's your call on the stock?
Yeah. So I think expectations were low. So people were not expecting the import alert to be lifted. And so not incrementally negative, but had this been, say, import alert getting lifted, this would have been certainly a big positive because Sun Pharma has lost significant amount of revenues in US generics because of the Halol import alert over the last 2-3 years. So had this been lifted, we could have seen growth in their US generic business, which has been lackluster over the last 3-4 years. So I think neutral from Sun Pharma point of view, as there were no expectations. Overall, my call on Sun is a buy. So I think the risk reward is better in Sun versus other large cap generic companies. Largely, what I'm expecting is over the next 4 to 5 years, Sun revenue should grow high single digit to mid-teens, depending on how their various launches on the specialty front shape up the next 3 to 4 years.
Absolutely. So, okay. So, Sun Pharma, I mean, not sort of gunning for it in a big way, but let's get your top picks then. Now, either a company where you think they have great US, scale-up potential, a great pipeline, or maybe a more India-focused company. Just give us your topics.
So, Sun and Cipla are the larger names we prefer in the space, largely because of their lower exposure to US generics. So, like Sun probably has got 10 to 15% of their sales exposed to US generics. Cipla has got about 30% of their sales exposed to US generics. But one good thing about Cipla is they have a lot of manufacturing of their generic products being done in the US. So from a kind of hypothetically, they're less prone to any tariff risk. While we believe that tariffs are not going to impact the sector on a medium to long term basis. But still, it's safer to be in Cipla and Sun. And again, Cipla has got a pipeline that we think should play out in the US in the next 2 years, next 1 to 2 years, meaningfully well. That's broadly on my topics.
All right, Vishal, thank you very much for that. A really good conversation. Appreciate you joining us with that perspective. We'll address some of these individual stories in a bit, but maybe we just look at how stocks are settled. I think the pre-open is finished, and as we always do, if we have the news-related and otherwise stocks to come up, we should look at how they're opening. Maybe start with names like Gokul Das. Okay, shrimp
these
first.
guys are really surging.
Avanti's up 8. Yeah. Shrimps are flying. Apex Frozen is up 11%. Look at something like a Waterbase.
7%
Look at King's Infra. By the way, there are about 10 of these listed seafood exporters. Very small names as well, so we're not going down there. But at least 4 or 5 of these, as we pointed out, they're sharply higher. And it is meaningful. I mean, this is not with regards to US. This is with regards to market opening up in a big way to EU. And Ria will join us in just a bit from now. Gokul Das is the other one, which was in a way, it fell from 1,200, almost 1,200 to the 600 handle, and started moving on. Moved on Monday in a very sharp way. Yesterday was flat, is back up about 4.5% today as well. So 786, almost 800 handle back here. A lot of pain for people who've been sort of holding on, who's seen as the big beneficiary of perhaps a US deal, lower tariffs, etc. And other sort of textile makers as well. There'll be Wellspun, Arvind, and a bunch of other names, which Himmat Singka, for example, on Monday was up sharply, and all these companies should come up as well. Sud pointed out names, chemical names. SRF is something he pointed out, and maybe, but that was from a positioning point of view, also exports to US, and SRF is up about 0.5% or so. So, a bunch of names, and as I said, we will address, this entire shrimp bit because it's new in that sense with regards to EU and the export market there in a bit. But let's just quickly run you through the trades with Sudarshan and Mitesh, the 9-10 trades. It's 9-11. So, Sudarshan, what do you have?
I have Titagarh. Consider buying Titagarh with a stop under 868.
Mitesh, what about you?
Well, we'll go with a buy on SBI cards for targets of around 860.
All right. Thanks a lot for that, gentlemen. Well, and in our morning chat, we had highlighted, right, that Welspun India, Gokuldas, they could see a bit of a relief rally. And that's the way it's playing out. And also just one more stock that we're looking at, Oracle. Overnight, the parent saw a big rally. So a sentiment rub-off is what we're seeing out here. And that's why Oracle, the Indian listed company as well, is up close to around 5%. And besides that, Indus Stars, there's a Kotak note. From sell, they have upgraded the stock to buy. That's Indus Stars. So that one as well is up on large volumes in pre-open, up 2.5%. Ria joins in to revise the Indian seafood exporters. Why they're running along. Ria?
Well, yes, India's seafood exports are expected to get a major boost since the European Union has approved 102 new fishery establishments for export to the EU. Now, this move is expected to add around 16% additional Indian export establishments in terms of trade volumes. And the Commerce Ministry has also said that they are anticipating an immediate increase of over 20% in trade volumes as a result of this move. Now, India's marine exports to the European Union were valued at around $1.1 billion in FY24. And remember that marine exports have recently been impacted by the 50% US tariff rate that has been imposed on India, US being the largest export market for marine products from India, with the EU following it. Now, in terms of exposure to the European Union for listed players, the first one is Avanti Feeds. Around 17.4% of the shrimp feed revenue in FY25 came from Europe, and the company has said that they are already working on expanding their presence in non-US markets, including the European Union. For Apex Frozen Foods, around 39% of the total revenue for FY25 has come from the European Union. This is up from around 26% in the previous financial year. And they've also seen a robust demand from the EU in FY25, and they've said that they continue to strengthen their presence in the market going forward. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, as well as IFB Agro.
Okay, all right. So all of these stocks up and about, some of them already supplying to the EU, with potential to boost those numbers perhaps. Ria, thank you very much for that.
Survi, the numbers are so stark. Billion goes to 20 billion because of this. That's the number. 1 to 20, 20x EU, right?
Because of getting that authorization and higher exports. And that's showing up in stock prices, doing very well. Remember, these stocks got beaten down also quite badly when the first round of the tariff news came through, because they're large exporters even to the US. So there's a rally going on. Let's quickly move on. Nigel was just talking about Indus Towers and that note. And we have Nimesh with more details, the standout brokerage of the day. Nimesh.
Well, Survey, that's right. So standard is on Indus Tower, a double upgrade from Kotak Institutional Equities to a buy from sell. And they've raised the target price in Indus Tower to 400 from 365 earlier. Now, Kotak believes that the concerns around delay in the dividend payout, as well as the capital allocation with the African foray, are actually overdone. They expect a gradual uptrend in the tenancy, which would drive a 8% EBITDA and a 10% EPS CAGR over FY27 to FY28. Again, their base case is a 3+1 market structure, and they expect Indus to start dividend payout in this year itself. On a valuation, the stock is sitting at close to 6.5 times EV/EBITDA and a 7.5% dividend yield, which is attractive to, according to the Kotak note, and hence a double upgrade to a buy from sell. And they've raised a target price in Indus Tower to 400 rupees.
All right. Indus is basically the other one to keep an eye out on. First rates coming up in a couple of seconds. We'll get down to individual names. What do we have? First rates. So 120 on the Nifty, 400 on the sensex. So this is now nicely building up. So 24,973. Yesterday we closed near 24,900. Today we are close to 25,000. Closer to 25,000. Nifty Bank is absolutely flat, or is it slightly higher? Slightly higher, 0.4%. So 54. So in line with what the Nifty is doing, unlike the last few sessions where it's underperformed. Nifty, the mid-cap index is up 0.75%, and I think you've got the small-cap index, which is opening up with gains of about 0.8% as well. So that's the overall picture. It's a green-looking screen, and I suspect the heat map on the Nifty will show you that everything is up in the green, except Sun. That's one of the names we discussed with an analyst right before markets open. Otherwise, it's all green with a nice triple-digit gain to boot this morning. 24,966. Survi.
The entire green screen with just one speck of red, as if, making it that one Shubh red sign. But anyway, let's talk about the gainers. So Kotak Mahindra Bank, after those block trades, is straight away up 1.3, 1.4%. Adani Ports is the other early mover, over 1% higher. There's Jio Financials, which is adding on some, weight. L&T is contributing as well with a gain of 1%. And some of the IT names, by the way, They're still running from yesterday. So TCS, Infosys, between 0.5% to 1% on IT names. HCL Tech is up, for instance, closer to 1%. Wipro is also higher. So IT is still running. Some financials are trying to pick up. Axis Bank, for instance, is up 0.5%. I mentioned Jio Financial, Kotak as well. So IT is running. Financials are trying to keep pace. Bank Nifty is up 0.5%, remember. SBI, for instance, also 0.5% higher. And today, FMCG is also not falling. So that's the good news for the index. Trent, HUL, a couple of consumer stocks, Nestle, all of them up 0.5%. You don't have drags today, and that's the good news for the market. Even auto names, after yesterday's profit-taking, names like Tata Motors have bounced on the positive side. Reliance is up about 0.25%. So today, Nigel, it's all batsmen nicely chipping in, and it's a good-looking century there.
Oh, well, that's right. And hopefully at the end of the evening as well, the Indian batsmen get their act together when we kickstart our campaign later today. That for later. For the time being, focusing on stocks that are moving around. Textiles, we had highlighted these stocks. You have a big relief rally that's taking place because India and US continuing their negotiations to address those trade barriers. The street likes it. Gokuldas exports up 8.5%. Welspun, not COP. COP anyway benefits because they have their plant in the United States. Welspun India is the one that we're talking about. That as well has seen a big correction. That's up close to around 7%, as is the case with Indocount. Vikram Solar, the Q1 margins coming in around 21.5%, compares with around 17.5%. 400 basis points expansion out there, while you have the revenue that's up close to around 80%. The street likes that, so that's why you have Vikram Solar that's up and about. And Vikran Engineering, let's get some of these stocks. Vikram Solar, Vikran Engineering, that's a newly listed company. That as well is moving up on rather large volumes, so good on that. Two stocks that were seen a big run in this month itself have come in for profit-taking. Precision camshafts, that's the play with regard to retrofitting. So that's a kind of an EV play. That has run up 30% in this week itself. For the month, it's up 40%. But today, falling on large volumes, down 6.5%. As is the case with Jacket, that's JTEKT. That as well is down close to around 5%. Some profit taking being seen out there. And you have Aether Energy, another stock that's seen a big run. Well, that one as well has come in for some profit taking. It's a good start. The positive is we've made a higher high, even the high that we recently saw of 24,982. That briefly got taken out. So good start to trade.
No, absolutely. A great start, and market breadth is pretty positive. And I hope market breadth also stays like this. I mean, last 2 days, day before yesterday, we actually, there was more down than up. Yesterday also was very mixed by the time we ended. Nothing large, but let's hope in the broader space as well, some of this action stays. Can we have all these shrimp stocks are flying, and they're all up big time, 10 to 14, 15%, and we'll try and get the companies on to get a better sense of. The EU thing is this is replacing exports, potentially lost exports to the US, or this is opening up. I mean, the size of the industry becomes much bigger for these companies. That's a big question, and if that is true, then we're talking very large numbers and meaningful for these companies just in terms of the size, scale of opportunity which opens up. So we'll have to get a better sense and dig a little deeper into this one. But Ria, of course, has been running us through the basic stuff. All right, well, Vetri Subramanian is with us, Managing Director and CEO Designate at UTI AMC. Vetri, good to have you with us here. So this 50%, I guess, without putting numbers, how much was that responsible for us to do a few things here on the GST, etc.? But it's good we did it in terms of lowering taxation on a range of products. And now on the external front as well, there seems to be a bit of de-escalation, some light at the end of the tunnel in that sense. Does it set us up in a good way, decent way? Earnings growth, of course, has to pick up, and that's the big one. But there's a bunch of things together which have to come together, right?
Sure. Thanks, Prashant. I'd just step back for a moment to say, I think India has put itself in a good macroeconomic situation in terms of the way we've managed monetary policy, the way we've managed fiscal policy. We know that the economy was not, firing all cylinders late in 2024, but we've been able to use the strong macroeconomic platform to cut rates quite significantly. We were able to cut the income tax rate in the budget, which means we were putting more money into the wallets of people. And now we're effectively increasing their spending power by cutting GST. None of this would have been possible if you hadn't managed your macroeconomic situation in a prudent manner. Now, talking about the tariffs, I do think that eventually it is transactional, it is not structural. So yes, there will be some impact on the economy, some impact on earnings, but really we're discussing quarters. We're not really discussing something which is very long term. At least that's the base case with which we've been thinking about it. So yeah, we were never too worked up about the tariff issue, and it's good to see that the government is doing whatever it can at the margins to be supportive. And yes, dil mange more, so we'd always be happy to see the government doing a lot more, particularly in terms of ease of doing business. I think that remains, to my mind, the big ask.
Well, that's always going to be welcome, Vetri. Morning. Thank you so much for joining in, and congratulations to you, by the way, on the change and the elevation. But dil mange more is absolutely fine. But till now, what the dil has received, what can that translate into?
Just one thing. Sorry, apologies.
Sorry.
President Trump. So President Trump posted in the morning, right? The tweet. Prime Minister Modi responded.
Reciprocated.
President Trump has posted Prime Minister Modi's tweet. He's picked up Prime Minister Modi's tweet and posted that on Truth Social.
Saying what?
He just posted it on Truth Social. On Truth Social.
Okay.
So I think it's interesting. It's basically, overture, reciprocation, affirmation.
Something. Now, we won't know behind the scenes. That's why diplomacy is so interesting. But something is completely clicked in the last 10 odd days. Whatever it is, it's good. It's good for both the countries, for the relationship, and definitely for the market. We'll actually put up those posts in just a bit again, the ones that Prashant is referring to. Prime Minister Modi responding to President Trump, and now President Trump basically posting that tweet, which was originally on X. So, okay, that was the first tweet that came in late last night. Now let's move to Prime Minister Modi's response, which was on X, on a different platform. This was on Truth Social. Prime Minister Modi acknowledged what President Trump said. There we go. And now what has happened is that Prime Minister Modi's tweet or the X post has been put on Truth Social for all of Donald Trump's followers. So this is good.
A lot of social media activity.
And they track every single thing. Who's meeting whom, who's taking pictures where, who's shaking hands with whom. So yeah, very, very active gentlemen out there. Okay. Well, in this environment, Vetri, to come back to my question, right? So this is really good. From a sentiment point of view, this is what the market wanted, and it seems to be happening. We've had enough on the local front as well. Now, how does all of this translate into better earnings growth? Because at the end of the day, that's a key reason why markets have been subdued and why FIIs have been staying away. So how much better can the rest of this year be compared to earlier estimates?
Yeah. First of all, Surabhi, I always thought there was too much financial chatter on the platform called X. Now I'm surprised to see that even foreign policy is being played out in real time.
Some say social media.
So this is the world we live in. We've got to deal with that. Coming back to your point on earnings, right? I think one of the things we've got to keep in mind is that all the prudence that I talked about in terms of the way we are managing the economy also means that actually in terms of nominal growth, when you in fact look at the data for the quarter gone by in June, nominal GDP growth was barely at about 8.5%. Then you look at the Nifty 500 group of companies, revenue growth for that universe is just about 6%. And profit growth is again just about 6.5% for that entire universe of companies. And if you look at the number of companies who are able to grow their revenues, let's say about 10%, that number is stuck at about 40%. Actually, that's the number for earnings. So just about 44% of companies out of the 500 able to grow earnings at greater than 10%. Now, I think that is a little bit of a challenge because when you start with starting valuations that you have in India, there are only two equity markets in the world, Surabhi, which are expensive. One is the US, the second is India. And there's much we can talk about why these are, two of the best placed economies in the world. But for investors, the challenge is that these are the two richly valued markets. And in the case of India, if you've now got earnings growth tracking in single digit, then, investors do worry about the fact that, it's a big ocean out there in terms of economies. There are other countries where arguably you could look at turnarounds, you could look at cheaper starting valuations, and maybe some upside on growth. So I think what's been missing in India is really that trend in terms of upside surprises. And finally, FY27 earnings growth estimates in India are already at 17%. So, the bar has already been set high. And I'm a bit skeptical about the fact that in an economy where nominal growth is running at 9%, can the corporate sector actually churn out 17% earnings growth in FY27? I think that's a very high bar.
That's an important point, Vetri, that you made. So FY27, and we've been doing this for the last couple of years, right? We start with very high estimates and we keep downgrading through the year. But for FY26 specifically, we again started the year with 12-13%, in some cases 14%, then it came down to about 10% after Q1. You don't expect a double-digit growth this year, despite all the GST cuts, income tax, RBI, all of that?
I doubt it. I'm not sure that will automatically convert. Look, the earnings expectation is about 8 to 9% growth for the current year. I'm not sure there's too much upside surprise to that. Remember that what's happening over here is that you are effectively leaving more money in the wallets of people in both, whether it's the income tax cut or it's the GST cut. And then it's a function of how those people will use it. But let's talk about numbers. The net impact of the GST cut is 48,000 crores. That's the number the government has told you. Now, how much can that actually multiply into your corporate earnings, right? 48,000 crores is a small number in an economy which is $4 trillion. That's just, 0.3% or so of GDP. So there is a limit to which there will be some multiplier, but it cannot be as large as what we are saying. And we need to see what people choose to do with that money, all of which will eventually help the productive economy. But does it necessarily translate into a huge earnings surprise? My simple answer would be no. And that's because look at the construct of the market in terms of the different sectors that drive earnings. Some of these consumption-related sectors are much smaller. So it'll have some buoyancy impact. But, we know that there are other aspects of the economy in the current year which are challenged.
Okay, all right. Hi, Vedri. Good to see you. When, I recall we had chatted earlier this year and you said the RBI has done a bit of a pivot, and now the focus is on growth. How much more headroom do you see for the RBI with regard to rate cuts? Do you believe that we could see another rate cut? Because the RBI, they've turned pro-growth, which is very, very encouraging. However, the credit growth is yet to pick up. So are you optimistic that the credit growth in the system is set for better times in the second half of this year?
So I think you're bang on there, Nigel. The point that I would make is, yes, maybe RBI will have the headroom to do one more rate cut. But to my mind, from a growth perspective, that is not the most critical element anymore. From a growth perspective, what you said is absolutely true. We need to continue to see interbank liquidity being easy, and we need to see a pickup in terms of credit growth. Once again, in a nominal economic environment of 8.5% credit growth, you're barely getting 9% credit growth. I am optimistic that given what RBI has done, not only in terms of making interbank liquidity easy, but also remember they've rolled back some of the harsh steps that they had taken in terms of raising risk weights on many forms of lending, and also, pulling back on some of the interventions that they had done, which were targeted at specific, financial companies and banks. So I think the cumulative impact of that sets you up for stronger credit growth. But it's that stronger credit growth that we need to see. The multiplier could be 1.3, 1.5x nominal GDP growth. It's that acceleration which will eventually cause a power up in earnings. And I also think it's retail lending which holds the key. I don't expect corporate lending to pick up in a hurry.
Just a bunch of other names, right? These are single stocks. Pull up NetWeb. My God, I mean, the April low, when market sold off on those Liberation Day tariffs, the April low I just looked was on NetWeb was $1,200. It's $3,200 now. And it's a company where I don't think there's any institutional coverage or anything of that sort. And now it's regularly featuring within the top 5 volume traded names on the NSE. So that is NetWeb for you. MobiKwik continues to gain quickly. So it's up another 4% this morning. So 321 here. Bharat Forge has been a bit of an underperformer, but Monday was a super day for Bharat Forge. Was up 7%. Yesterday was quieter. Today it's back up about 4% once again. Prime Focus has finally gotten off the circuit. 3 days on a trot, 10, 10, 10. And today it's taking it a little easy, 1% higher on Prime Focus at 193 on it right now. Sula was up 10% yesterday. I'm not sure there was any news flow. I don't think there was. 3.6, again, a big, completely bombed out name here, which is looking very well. right now. So, I mean, just a bunch of things to highlight at this point in time. Vetri, from your perspective and some of these newer, you've got to look for where there is growth. Globally, it's in this AI infrastructure, cloud, etc. There was a newspaper article yesterday, front page, saying that OpenAI is talking to lots of companies in India. Some of them are listed for cloud capacity, data center capacity, etc. I'm not sure how much of what I mentioned with some of these stocks is related to that. But have you looked at that theme? Any ways to play it? Vetri, I don't know if you heard the question. Go on.
I heard that. So I think, you will eventually find that a lot of our classic IT services companies will get involved in implementing, AI solutions for companies. I think many of them have been preparing this for a long time. But of course, the concern on IT companies has also been about the fact that, will their core existing business get hurt by the fact that customers can use AI to actually reduce the outsourcing burden. So these are two conflicting, sort of trajectories that we'll have to keep in mind. But, time and again, and I've been looking at the IT sector in terms of its growth going back all the way to, the mid-90s, 30 years ago. And what we've seen is that every time there is a new wave in information technology, the IT companies have managed to go one level upstream to become the business and solution providers to large enterprises. So I do think with a little bit of a time lag, once you're done with the big investment boom, which is happening in the data centers and, the people working in the core part, once it comes to business solutions, these are the companies which have the domains, and I think they will play a role. Within that, there are a few smaller companies which are arguably better placed, but I think, it's still very early days to be able to say that one or two of these companies have significantly differentiated themselves. But at these starting valuations for IT, I would tend to be more optimistic rather than pessimistic.
Yeah. By the way, so as I was saying that no institutional coverage on NetWeb, I got corrected almost in real time. Somebody sent me a report, a viewer. So in real, that was fast.
The stock has definitely caught investors' imagination and fancy. As seen as a play beyond the obvious, not IT services, but platform.
1,200 to 3,200, right? And this is from April lows.
And this is telling you the market is so thirsty for any AI-related play, right? Anything when it
supercharged.
When it comes to large language models or AI or any of the new technology. Vetri, before we let you go, finally, I'm coming back to that rather somber note that you gave us, that beyond all the pomp and show of the reforms, don't expect earnings to pick up in a big hurry. So in that context, and what do you do in a market like this? I mean, you've always liked financials, for instance. IT has its own set of woes. FMCG, etc. I don't know if there is a durable pop or pickup. But autos, maybe? I mean, autos, the cut is obviously a little more structural in nature, right? In general, this is not a one-time. Now the cost of small cars and bikes gets cheaper. Could that be a durable play? But what else do you do in this market if you're not going to get very easy overall index level growth?
So I think the focus at this point has got to be in terms of, where you're getting the best balance of valuations and where you're getting the best sort of potential delta improvement in earnings. And that's the way to go about it. I wish there was some way to continuously sort of rotate between excitement on a daily basis, but that's not the thought process with which we are working in the portfolios. These are sort of attuned to what we think will be longer term growth rates and outcomes for them based on current valuations. So we are not trying to, dramatically change our portfolio allocations. The good news that's come through will help some of our portfolio stocks, and some of the adverse stuff that's happening across the world will hurt some of them. But we are happy to run with a diversified portfolio. But I think the key that one will have to navigate in the next few years is more about sustainable earnings. The last 5 years have been about a dramatic rise in valuations combined with earnings growth. I think we are in an environment where the stock level earnings outcomes will play a much larger role in terms of outcomes. So stock picking and earnings, growth by individual companies will most probably be far more important than just trying to play themes and sectors and rotate out of them.
Okay. All right, Vetri, on that optimistic and pragmatic note, we'll wind it up for today. Thanks so much for joining in. You have a great day, and we look forward to the next call again soon. Okay, from all the secondary market action, it's time to turn our eyes on the primary market. But before we do that, by the way, in the secondary market, IT is fired up again. So yesterday's run after Infosys, it's not entirely done. Look at Wipro, look at HCL Tech, look at TCS, all leadership stocks on the Nifty. These are the top 3 names that I've just taken. And then banks are anyway doing pretty okay. So you have the twin engines fired up today. So good news for the Nifty. Banks and IT both doing well. Very quickly, now let's turn our attention to Urban Company. Now, as a business, I suppose most of us have, had a touch and feel, had an experience. But to really understand what this company is all about in terms of its financials, its business model, and the asking valuations in the IPO, let's go across to Manglam. Manglam.
Product, rather service that everyone knows about, at least in the top cities of the country. They are formalizing an otherwise informal service economy. The issue opens today. They're raising about 1,900 crores. That's the issue size, of which 854 crores have been raised via the anchor investors already, which include the likes of Nomura, Aditya Birla Sun Life, ICICI Pru, Helios, SBI Life, etc. And it's a 1,900 crore issue, of which the offer for sale is 1,400 crores. The fresh issue is about 472 crores, which will be invested right back into the business of the company. The earlier investors are actually the ones who are selling. None of the promoters are offering any shares in the OFS. The price band between 98 to 103. At the higher end, it values the company closer to 14,800 crores as the market cap. If you look at their revenues, they've compounded over 30% over the last few years. So 600 crores has turned into around 1,150 crores in the last 3 years or so. And on an adjusted basis, the EBITDA has turned profitable for the first time in FY25 at 12 crores. And they've reported a profit of 240 crores in FY25. But remember, this is on account of a non-cash change that they've done in their deferred tax assets. The biggest opportunity for them. They're currently present in 47 cities, and they have the potential to expand all the way up to 200 cities by FY30. And the market that they're in is largely unorganized, so that shift is extremely crucial. But apart from the services business, what they're also looking at is the hardware business. So they've, entered water purifier, locks, etc. under the native brand. So that is another revenue vertical for them. And the international business, where they're growing right now, accounts for 10% of their overall services or overall business. Let's see whether that can scale up further or not. As of, annually, they do about 5 to 6 million users. So users increasing is something that we'll be watching out for as well. The question, for all of this, how much are you paying? If you assume a revenue CAGR, which continues over the next few years at 35%, and the EBITDA margins, adjusted EBITDA margins crosses 3%, then you are looking at the company being offered at 7 times sales, 4.5 times EBITDA, and 60 times FY27 profit. So obviously not particularly cheap, but the growth runway is fairly long.
Yeah, but that's the thing with these platform businesses, right? They rarely come cheap because of the promise of long-term growth. But Manglam, thank you very much for that. That really sets us up nicely for our next conversation. Abhiraj Singh Bahal, Chairperson, MD and CEO of Urban Company is with us. Abhiraj, great to have you in, and yours is a business that a lot of people would be looking forward to, in terms of in the public listed markets as well. So let's start right there. The last couple of years, you've been growing your top line at over 30%, in some years 35%. Now, for how long can you continue at such run rates? Because the runway for growth is so long. And the point that Manglam made on the profit, you did show up a profit in the previous year, but that was because of the technical factor, like he mentioned, the deferred tax, assets entry. When do you genuinely, business-wise, when do you see complete profitability?
Thank you very much for inviting me. If I talk about Urban Company's financials in the last few financial years, we have improved our revenue from operations, which was about 437.5 crores in FY22 to about 1,144.5 crores in FY25. And if you look at that 707 crores of incremental revenue that we've added to the top line, we've seen a translation of about 385 crores of that moving to the adjusted EBITDA. Adjusted EBITDA moving from negative 373 crores in FY22 to positive 12, and more than 500 crores getting translated to the profit before tax, which was negative 514 crores in FY22 and is now about 28.6 crores in FY25. We don't look at the deferred tax asset. You're right, that would give an unfair picture to the investors. So I would say, broadly speaking, the company has turned a corner and is sort of at a break-even stage. We've grown well in the last few financial years, but we believe that the opportunity ahead of us is tremendous. Less than 1% of the home services sector in India is organized and online. Most of that share would be attributable to urban company. But we really see the opportunity for us to organize this industry, to bring in standards, quality control, reliability, and take a significant chunk of this industry online over the next 10, 20 years.
So would it be fair to say, Abhiraj, that you can keep growing at over 30% for, say, the next 3 to 5 years?
I think it would be difficult for me to give specific guidance on growth numbers. But what I can say is that we are a company which is working hard to innovate on our customer offerings, to innovate on the promise that we offer to service professionals of higher earnings and social security. And it is very much our ambition to continue to grow at the same clip that we have been growing for the last few years.
Abhiraj, good morning. Prashant here. Good to see you, and good to finally, I think we'll to talk about urban company in the listed universe. I just want to say that you guys came out with the advertisement a couple of a month ago, 2 months ago, talking about, I think it was very nicely done ad that talked about this worker who migrated from Bihar to a big city and kudos came to service the AC. I mean, really talked about dignity of labor, and I think it touched a chord with many that I know. So kudos. The other bit, of course, is I think in terms of what we broadly describe as gig workers, urban companies also rated higher amongst employees, etc., in terms of lesser complaints and job satisfaction, etc. So continue on that path. So just a quick sense on how you see your business progressing from here, Abhiraj. You said less than 1% of this, what you do, is organized. I mean, everything else is unorganized right now. So the mission or your job is to organize this and provide a sort of quality of service at a certain price level, etc. Right? That's how one should think about this. So you're not competing with the local. I mean, of course, you're competing as well, but you're trying to organize more and more of these. Would this basically lead to lower and lower price? Would this necessarily mean lower pricing as we go along, as you continue on this journey, Abhiraj?
Prashant, firstly, absolute pleasure to interact with you. I've been following you for many years.
Thank you.
You're right. I think what we see our role as is organizing this industry, helping customers avail a standardized, high-quality experience at home, and also empowering service professionals who join the platform with the promise of better earnings. Typically, our service professionals make anywhere between 30 to 50% higher than what they would make in the offline world right off the bat. They also have clear career progression. They undergo skill-based training and they get certified. They have access to a life, accidental, and health insurance cover. So it's a way for them to formalize and become part of the formal mainstream economy of India. And to that extent, I think the 99% that remains unorganized and fragmented and local, more than competition, we see them as future partners in this journey for us. And the onus is on us to work hard and create livelihood opportunities for them, which are attractive, and give them the opportunity to upskill and move up in their career and deliver those superlative experiences for consumers. As far as pricing is concerned, with densification of our network, we are able to utilize service professionals better. Service professionals spend less time traveling between jobs or waiting for jobs and more time at home delivering orders. And consequently, the entire systemic cost to serve comes down, which results in two things: A, higher earnings for service professionals, and B, lower pricing for end consumers. And we've seen this play out in some of our high density micro markets in the top cities. So that will definitely be our goal.
Just one quick question, one more quick question, Abhiraj. Are you in most categories where you want to be, or there as well, I mean, you will continue to expand offerings?
I think there are several categories that we have not yet entered, and we would like to expand our offering into it. I think we started with, on-demand home services, which are used maybe once a month or once in 2 months. Services like beauty, plumbing, carpentry, deep cleaning, appliance repair, etc. We've recently entered into more high-frequency use cases with InstaHelp, where we offer a trained, high-quality house help worker at your doorstep in a matter of 30 minutes or less. This is currently being rolled out as we speak. It's very nascent, only a few months old. And there are multiple use cases in the future around InstaHelp that we will also look to offer. Fundamentally, if you think about it, Prashant, any service that can be delivered in the four walls of your home, where a trained service professional can come and deliver that service, we see that as our playing field. And it's very much our long-term ambition to offer all of those services through our platform.
I can tell you this, Abhiraj, that Insta Help has been noticed by your existing customers already, even before, big marketing blitzkrieg taking place. But yeah, that's the innovation, looking at all kinds of services, as Abhiraj pointed out.
Well, Abhiraj, good to speak to you. This is Nigel on this side. I've used your services, amazing. Great to see the way you have scaled up the business. And I'm sure the shareholders that are looking to be part of the entity will be hoping for a very, very good experience. So that's all on you. That said, a couple of questions then. Native, that scaled up very, very well in the last few years. Brilliant scale up is what you've seen. But, obviously you'll have a bigger plan out here. How large can it become? And by when do you see, at what revenue level do you believe that it turns profitable?
Nigel, thanks for that question. So, Native was launched a couple of years back by us.
Yes.
We offer two products there, smart water purifiers and smart electronic door locks. We believe both these products have very strong synergy with our platform and our service ecosystem. It's growing very well. Margins have been improving. It's loss-making today, but margins have been improving. Entire last year, it had a negative 33.5% EBITDA margin as a percentage of net revenue. In the first quarter, that came down to about 15-16% negative EBITDA margin. We believe operating leverage will play out here as well. And as we continue to scale, Native will eventually become profitable and can over time become very profitable. Two advantages we have in Native vis-a-vis any traditional player is, one, a meaningful percentage of the sales comes from our own platform. And in some sense, that's all sort of free for us. We don't have to pay a retailer any commissions or channel margins there. And two, we all leverage our existing service network, which is already built out for water purifier servicing and repair, to cater to our customers in Native. I think those are two structural advantages that we have. We want to position Native as a full stack brand, just like our full stack platform, where we own the consumer journey end to end, from sales on our platform all the way to after sales service.
Okay.
Over time, think of it as a connected ecosystem in your
Got it.
Of devices.
All right. Abhiraj, final question from my end before I let you go. In the pre-IPO space, people appreciate a good idea. They like scalability. Once the company is listed, all eyes are on profitability. So is that going to be one of the top draws that you're looking at?
I would say it's very important for us to continue to grow well and make sure that that growth happens at the back of profitability. Particularly for our core services business in India, which is already profitable at about 10% EBITDA margin last year. We would like to continue to compound it and show margin expansion. I think some of our new bets like Native and InstaHelp will still require investments. And again, the goal there will be to build those out in a capital efficient fashion. We have very much eyes long-term on not just growth, but also profitable growth and delivering profitability. I firmly believe that eventually companies will be measured on PAT and cash flows to that extent. Even all the other metrics like EBITDA or adjusted EBITDA are just measures to show investors the pathway to those eventual cash flows and PAT.
Abhiraj, compliments to you. You're speaking a language that the listed public market really understands. And we've traveled such a distance from the time the first platform companies hit the street. I think what you're saying is going to go very well down with people who understand and what they need to see in the P&L. Quick final question on the margin profile and what you're looking to build. Because on one hand, there is the native business, which keeps scaling up. Right now, it's 10% of your India revenue. You are also in international markets like, I think, UAE and Singapore. So not sure if you're able to charge higher for services there. And then you look at simultaneously expanding in local Indian markets, tier 2, maybe tier 3. So as you combine all of this, will it be dilutive? Will expansion into India be margin dilutive? Will it be offset by your international operations? Just trying to understand, how you'll drive the margin and what would be an aspirational, sustainable margin band for you.
So we look at really 4 segments of business, 3 which we have already reported in our RHP. India Consumer Services, Native, and International. Most likely, starting the first earnings call, we will add a 4th, which is InstaHelp. And across these 4 business segments, what we will hold ourselves accountable to is clearly communicating to investors where we are in the journey. How is the top line progressing? How are the contribution margins and EBITDA margins progressing? And if segments are currently loss-making, what is the pathway for them to become profitable? How much time will it take and how much capital will it take before they turn profitable? India Consumer Services is already profitable. There, I think we have to continue to grow it with further profitability, whether we enter into newer cities or newer categories. That margin expansion has to play out there. As far as Native, International, and InstaHelp is concerned, I think in those segments, we will clearly call out where they are today and what the path will be towards profitability.
That's in the first quarter call, right?
That is first.
Yes. We look forward to it, and of course, look forward to speaking with you as well. Good luck with the issue. I'm sure you'll do well. Thanks very much, Abhiraj, for joining us here on CNBC TV18. Thanks indeed. All right, well, we'll take a quick commercial break here and we'll come right back. Markets, of course, are looking pretty solid. 120 odd points, 24,990 is where the index finds itself at. We come back with the management of KEI Industries. We'll talk about what the impact of the GST rationalization is on the KEI's business and, of course, what it does to the sector. Stay tuned.
Welcome back. Well, let's get to our next discussion, that of KEI Industries. Mr. Anil Gupta, the CMD of the company, joins us on the show. Hi, Mr. Gupta. Good morning. Good to see you in. Good to see you nice and safe. I believe you were traveling, but you're back, and that's good news. Thanks a lot for joining in, sir. Just to tell our viewers that we are going to be focusing on 3 big points: the lateral impact of GST rate cuts, cables as well as wires industry, the dynamics, the growth drivers, and any kind of tinkering with regard to the FY26 guidance. What about the export outlook? Well, to answer all of those queries, we're joined by Mr. Gupta. Hi, Mr. Gupta. Good to see you in. Well, this entire GST rationalization, will it give rise to some kind of consumption boost, according to you? Do you foresee any kind of lateral impact of the GST rationalization on housing wire demand due to higher savings? Do you think so?
Thank you very much, NBC, for inviting. GST rationalization will definitely have impact on improvement in the wires market, especially the home wires market in the long run, as it will have more cash in the hands of the people to spend on the houses. However, on the wires, there is no reduction in GST, but there are a lot of items of consumption where GST has been reduced, which relates to the home consumption. And that will help boosting the consumption and the wire market because of the cash availability. So far as cable market is concerned, I don't think it will have any impact on the cable market. However, I think that the demand boosters are different. That is the capital expenditure by the government and the private sector, and also the export potential which we have from India.
So, Mr. Gupta, hi, morning. Could you give us a sense of the bump to volumes that this could see? I mean, would you hazard to put a number, a ballpark?
It is too early to say any ballpark number because I said that the impact will be only on the house wire market, not on the cables. However, I think it may impact the market size or demand by 5 to 10% because of the higher availability of spending power with the people.
I see. So it's not directly because of, I mean, at the end of the day, people buy when they need it, right? I mean, it's not, it's like a, you know, it's not a discretionary item in that sense. If you need it, you need it. 5% higher, 5% lower does not matter. But you're saying because of more money left in the hands of consumers, overall demand may see a 5 to 10% boost.
I agree. As it is, we are seeing a growing demand for houses in India because in India, people are, everyone wants to have their own house. So definitely this market will keep growing. However, competitive intensity will remain there because of a lot of players in this market.
Okay, all right. Mr. Gupta, quarter one saw a bit of tepid growth for most sectors. But for your sector, cables and wire industry, it outperformed. Because you had strong growth, higher focus on exports as well. And that's what helped the industry. If you could give us a brief idea, how has quarter two been so far?
See, quarter two is going as per the projections. And I think our space, this wire and cable market space is still strong because of the, capital expenditure and infrastructure boost in the country. And I think I'm very optimistic about the whole year and even the years ahead about this space. A lot of demand is generated from solar power developers and associated investments like battery energy storage and other kind of energy projects or data centers. So this space should perform better.
So demand is as strong, is what you're saying?
Yes, I'm just saying strong. It should, it should remain strong.
Okay, all right. And, before we let you go, do you want to revise your guidance for, how FY26 is shaping up? Is it on track? Can you do a little bit better? And tell us, give us three numbers basically: exports, revenue growth, as well as margin outlook.
See, I have already projected an overall revenue growth of 18 to 20% and revenue, the EBITDA margins of around 10.5 to 11%. I will remain on that. However, our effort will always be to improve the margins and improve the revenues. But I can't give better guidance on this at this moment.
Okay, all right, Mr. Gupta, we'll leave it there. Quick conversation today. Are you still in Nepal, sir? Are you back?
Yes. No, I'm still in Nepal because yesterday all the flights were cancelled.
Okay, all okay? I mean, obviously we've been seeing visuals and reports, disturbing reports out of there, but I hope you're safe and sound. Your family, if they're with you, is safe and sound.
No, I'm absolutely fine and safe and sound. Thank you.
Well, that's good to hear, Mr. Gupta.
Look forward to seeing you back here in the city soon, Mr. Gupta. We'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. Well, let's just focus on the next bit of conversation. Are India-US ties heading for a bit of a reset? That's the question. Both leaders of India and US have tweeted at each other. President Trump first, followed by Prime Minister Modi, and then President Trump posting Prime Minister Modi on his social media platform, Truth Social. Ajay Dua is former Union Secretary, Commerce and Industry. Arpita Mukherjee is professor at Indian Council for Research on International Economic Relations. Mr. Dua and Ms. Mukherjee, thank you very much both for joining us here. Ms. Dua, if I can ask you this, how would you see this? This is certainly de-escalation, right? Both sides from the escalatory ladder, so to speak, now climbing down a little bit, step by step. How would you read it?
Very positively. I think we should forget what President Trump was trying to achieve in his endeavors to bring about peace between Ukraine and Russia. of which we had become a collateral damage, particularly because we didn't have the leverage which probably China and the European Union had vis-a-vis President Trump. So to that extent that he realizes even now that there is no point going after India and putting penalties on India for having traded with Russia, and at a time when China, European Union, and the US itself was beneficiary of India's of crude oil of Russia. So I'm very delighted to see this. Let's forget what he did and tried. Let's look forward. The US is an important trading partner for us and an important strategic partner. And I look at the relationship in that context.
Okay, no, absolutely. Ms. Mukherjee, your first thoughts, and, we, the stock market types, are prone to jump to, conclusions, right? And, well, a deal soon, round the corner, how fast can it be? Are those right questions to ask? And is there any way to know at this point? There are various times. Yesterday we had somebody who said, and we were asking this, before all this happened, when do we see some sort of a deal? And the gentleman said, certainly before March, before we here in India get into the election season. So we'd certainly like to conclude it. This seems, of course, all of this now makes it much closer. What would you say?
See, basically, one thing is for sure that there is a movement in the right direction. When you look at businesses on both sides, they want a deal. Of course, India wants a fair deal, like whether we will be getting a 0 for 0 or we settle for a 0 for 15% tariff. And probably now our exporters would be happy to settle, if India gives in a 0 for a 15% tariff. You have to also see the deal comes at a time when the GST has also been reduced for many, items, and India is, so there is a domestic demand boost. At the same time, there is a trade negotiation. Now, this entire negotiation is very strategic. Nobody is looking at the economic interest. Like if you look at Trump, he is also not looking at the economic interest and the repercussions. And because he is just focusing on tariffs and linking tariffs to multiple other things. I think with the US also moving into a festive season, and India and Brazil moving into a festive season, and inflation rising in the US, he will gradually turn around and bring down the tariffs. And therefore, this trade agreement will be a step in the right direction.
Sure.
Coming to the core context of the trade agreement. See, now they are relaunching the trade agreement. Relaunching the trade agreement and signing the trade agreement is totally two different ball game altogether, because we also have our domestic sensitivities. But I think the 50% tariff has kind of diluted our domestic sensitivities to a lot extent, and maybe industry will be more acceptable to an FTA.
Sure.
The other part is India is also looking at European Union. Even after the FTA, European Union put a hefty tax on Google. So, it also gives brilliant ideas on, negotiating on different aspects that can happen.
No, absolutely. And by the way, I must point out here that there's a statement from the chief economic advisor. I suppose he must have been asked this question perhaps at an event, or he must be speaking at an event, and he said that India is not part of any initiative looking for an alternative currency to the US dollar. So the speak from both sides is very, very positive. Maybe it's just a reiteration, but the fact is it's been put out there in public domain, and the statements are obviously made very, very carefully. Mr. Dua, sir, so to get back to the point, the thing is till now, tariffs were not part of a trade negotiation, which can still happen. They'd become part of political brinksmanship. But now, at least if we go back to the point on trade, how do you think can the logjam be broken? Because the thing is, in most of the deals that the US has done with the rest of the world, the US hasn't given an inch. It's been almost 100%. But here we go back to the sticky points: agriculture, dairy, GM crops. Do you think most of this can be resolved?
I think so. There is nothing, if the two sides are determined to come to an agreement, that things cannot be resolved. I'm a firm believer in that and an optimist, probably an optimistic view. But I'd like to see the intention of the US to arrive at an arrangement with India by starting off with the lifting of the 25% penalty for having traded or continuing to trade with Russia in crude oil. That, I think, India should make it very clear to the United States that while we are talking about the bilateral trade agreement, and we do know that there is a 25% export duty on Indian products to the US, that is the kind of a minimum we expect the United States to do. I repeat myself, lifting of the 25% penalty on our original 25% should be imperative, and we sit down to resolve one dispute, one point of conflict or the red lines which we or the US has, one by one. And we know that there is a 25% duty on our products. So everything which we do has to be well within that 25% outer limit.
Point taken, sir. Absolutely. And this has been the ask of the Indian side already in the past couple of weeks, that the additional 25% needs to be, revoked for real negotiations to start on trade. Very quickly, sir, one additional point. I mean, in the last few weeks, we've also seen what's the overtures with China, right? The SCO summit. Now, how do you think India will ensure it? It's a very delicate balancing act, because there's been a lot of talk about boosting trade ties with China. And now we have to go back to, obviously, negotiations and fixing things with the US. Do you think this is going to be easier said than done?
Not really. I think China has, I must say, to China's credit, at the SCO and in the bilaterals with Prime Minister Modi, they have talked of a multipolar world. They're not talking of there being only one center of power in the world. That was what everybody looks at as the US, or there being a bipolar center in which China comes in. They've talked of the world consisting of several poles, of which India could probably be one, Russia and Brazil, or whatever we say. The question is, we want to increase our trade with China, undoubtedly, but we also do not want our trade with the US to suffer. After all, the US is our biggest trading partner today, with over $130 billion of trade, of which 86 billion was exports alone. China is the other way around. We import from China far more than our exports, and we have $100 billion deficit with China. So the question is, we are dealing with two different things. It does not, to any extent, conflict. And I think the US itself wants to have a trading partnership with China. So why should anyone be objecting to our trade with China and the trade with the US building up simultaneously?
No, you're absolutely right, sir. Both of you, thank you very much. Very interesting conversation, and of course, possibilities, right? That's what we all look forward to. Appreciate it very much. We'll take a quick commercial break here. Manisha, on the other side, commodities in focus. Stay tuned. Welcome back. Let's shift focus to the commodity space. Manisha is here with the one commodity that she's tracking. Manisha, good morning.
Thank you for that, Prashant. I'm looking at the crude oil prices because there's no letting down in gold and silver, but the crude oil prices also have been very, very volatile. We're looking at prices extending gains after that 2% gain overnight to nearly a percentage point higher in the Asian markets right now. This comes in as a knee-jerk reaction after that Israel attack on Hamas leadership in Qatar, while one-off is what they're saying, but we have seen concerns coming back in that part of the world as well. Apart from that, it really has been about the US president asking Europe now to impose tariffs on the buyers barrels of Russian oil. The president has urged European Union to put nearly 100% of tariffs on the major oil buyers of Russian crude like India and China. And that really seems to be bringing all of those concerns on fore here. And then apart from that, OPEC Plus have increased production yet again for the month of October, but this time it has been a modest 137,000 barrels per day, unlike 400,000 and 500,000 that they have been doing since the month of April. So lower output from OPEC Plus also has been in some sense supporting the crude oil prices there. We also do understand that nearly 17% of Russia's refining capacity is shut as of now, and this is because of the Ukrainian drone attacks that we saw all over in the month of August. They haven't restarted yet, and that could be a bit of a concern too. And then it has been about the macros as well. The weak USA data that we have seen, the weakness in US dollar index, ahead of that most important US Fed meeting in the next week is something that everybody is keeping a focus on. What also is keeping the crude oil prices in check, the reason that you haven't seen $70 a barrel go on the higher side is the EIA report, which says that the global inventories have continued to rise in last 3 quarters in the global markets there. EIA also says that the OPEC Plus hike in output also is keeping excess supply available in the international markets there. If you look at the crude oil inventories, this is going to be the 3rd straight week that we are looking at a rise in US crude inventories. Having said that, remember, the US summer driving season also has come to an end, so you could be looking at maintenances going through forward there. Saudi Arabia, most importantly, has lowered its official price for crude for Asia for the October delivery. So that tells you that there are higher supplies, demand can be a concern, and Saudi Arabia bringing down crude prices is what is keeping the prices in check there. If you look at the crude prices, then we are down by 2% in the last 1 month, and it's down 12% for this current year. And the markets do believe that there's no gaining here unless you see supply disruptions. Most banks and brokerages have lower crude oil price forecasts by the end of this year.
All right. Manisha, thank you very much for that. We'll take a quick commercial break here. It's our special segment. It's the Economy Lata in Conversation with Chandresh Jain of BNP Paribas and Ranadib Roy of RV Capital on the falling rupee, rising yield. Stay tuned. Coming up.